In our Jackson Hole video, we sounded a warning that investors needed to take action if inflation dropped slowly, and worse still, if it went up. This is exactly what has happened. The CPI for August increased by 0.1% and only dropped to 8.3% over the past year. We expected the CPI to drop to 8%, and the last figure was at 8.5%. Excluding food and energy costs, CPI rose 0.6%. We expected a climb of only 0.3%, and it rose 6.3% on a year-on-year basis. While food and medical costs both increased 0.8% in August, what is worrying is that shelter costs jumped 0.7%, the biggest increase this year. To summarize, inflation is mainly coming from food, transportation, and rentals. All this means that we have some way to go before we see inflation fall drastically. And this also means that next week, we will see the US Federal Reserve raise interest rates by 75 basis points. In fact, Nomura and KPMG think that the Fed will increase interest rates by 100 basis points next week. The strong inflation data caused the Dow to drop 1,276 points. The S&P dropped more than 4% to 3,932, and the Nasdaq closed 5.16% lower. In the meantime, how do investors make money and protect themselves in these volatile markets? Let me tell you how. Number one, buy the US dollar. When stocks drop, the dollar goes up. This is the golden rule. Secondly, buy a hedge so that you make money when the stock market drops. Now, on the stock market front, it's not the end of the world yet. In these volatile markets, you should look to buy companies that are not affected by inflation. You should buy companies that can afford higher interest rates. And you should buy companies that have low or no debt and a solid pipeline of goods and services that are in demand. Also, investors should look closely to buy value stocks, which have outperformed the average index 67% of the time. The consumer staples, healthcare, and industrial sectors in the S&P 500 have racked up the lowest losses so far this year. Singapore stocks have performed well during this period of market volatility. And OCBC sees the Straits Times Index climbing 20% over the next 12 months. Let us make money for you from the inflation-led volatility until the market stabilizes and inflation finally starts to drop. Investors, take note. It is still better to invest in markets and take an opposing position that will make you money when the market drops than to leave your money in cash in the bank, which will erode your purchasing power amidst global inflation. Contact us now at bit.ly/algotrader on WhatsApp and subscribe to our YouTube channel at bit.ly/algowealth.